Hello and welcome to Smart Money. Joining me today is Samuel Seeff. He's chairman of the Seeff Group, which is a Southern African real estate brand trading now for over half a century. Samuel, good to have you with us today. And right at the top, Seeff is a phenomenal growth story, boasting the growth of a family-owned business into a leading national company now, established back in 1964, still trading today. What would you say has seen to Seeff's sustained growth and success over the past 60 years?
Hi, Alicia. Firstly, thank you very much for having me. Nice to be here. And not to want to correct you because you weren't wrong, but we're actually 60 years and this is our 61st year going forward. So it has been a long time on the real estate landscape. And I'm not quite sure one can point to one specific thing as being the reason for our success. I think there's a number, um, but I think it starts with a ongoing focus on doing 100% the best that we can in terms of our service to our buyers and sellers, our landlords and our tenants. It's a commitment to trying to do the very best we can for them. Integrity is one of our first and foremost values. We stick to that. We look to provide the best that we can to our clients. And I suppose that together with a family business, I'm second generation. My late father started. I've been involved in the company for 40 years and at the helm for roughly 35, etc. So I think those values are very important. We look after everybody in the company in the same way. One of the other aspects that I do think has led to our ability to be successful and keep on going is a focus on innovation, on being at the forefront of whatever is happening in the industry, being industry leaders, influencing as we think is best for the consumer, for our clients, and for the industry as a whole.
Especially, Samuel, where real estate and that industry is one that feels, the troughs and the peaks of each economic cycle, and withstanding it all is no easy feat. At the moment, debate is raging on whether now is the time for South Africans to buy property. You've said before that you think it is, and you're expecting sales volumes to pick up. You're expecting prices to start rising as well. What's the basis of that forecast or that outlook?
So, Alicia, I think that we've had a pretty tough time in real estate for almost a better part of the last decade. I think there's some issues in different parts of the country. People say to me, well, what's the property like? And, property market like? And I say, well, it's very much like the weather, depends where you are. So if you've been in Johannesburg for almost the last decade, you've seen almost no capital growth. We've had a very difficult market. Buyers have been reticent to come forward to invest. You had a better positioning in the coast of South Africa, specifically the Western Cape, but going up the Garden Route and even through to Durban and the North Coast, I think it has been more activity. But prices have been pretty much stagnant for the last 10 years, at best beating nominal inflation on a real side, not really increasing. So eventually that has to change. And I think we're going to start seeing that now with the two rate cuts that we had at the end of last year, with a 0.25% that we had already in January. I think buyers are starting to come back into the market, and the sentiment is equally very much better since the government of national unity. And my view is that as a result of that, I think buyers will start coming in. And if you want to get in at the bottom, my view would be the first part of 2025 will be signaling that time.
Okay, so add on to that. I mean, what's your top bit of advice to any South Africans who's looking to buy their first property in 2025? I mean, how discerning do we have to be when it comes to that advice you're giving, depending on where exactly they're sitting in the country?
So absolutely discerning. The golden rule of property anywhere, as people say, is location, location, location. So the first rule to a buyer buying his first property or an experienced investor is try and buy the worst house in the best street or in the best suburb, because you're always going to get automatically the uplift and the capital appreciation of the properties around. So you don't want to be buying the best house in the worst street, because over a period of time, you're not going to see that lift and that capital appreciation when you want to resell. And particularly for first-time buyers, that's not going to be their only home, hopefully, that they will own. They'll buy a small apartment or a smaller house, hopefully have a family, grow and graduate into bigger homes. So you want to be able to make sure that you can sell. And if you're buying in an area where there's strong demand, where it's popular, you're going to get a lift in terms of the potential selling price down the line. You'll hopefully make your adjustments and improvements so it's not the worst house in the best street. But when you come to sell, there'll always be a market for that particular home if you're buying in the right area. So that's the first. The second, specifically for first-time buyers, is be careful about the interest rates. Now, I've called for drastically reducing the interest rates. I called for 0.5%. We got 0.25%. And I think we could come down another 1.5% from where we are now comfortably. And I say it not because I want to be provocative or want to talk up the real estate market, but this country needs growth. The GDP needs to grow. We need to drop interest rates, let GDP grow, let investors come in. And yes, we will have a short-term issue with the exchange control, but if we are on a path of GDP growth, I think investors will come back in. So, I must caution first-time buyers that that's my sentiment. I don't think that's shared by the Reserve Bank, the Monetary Policy Committee, and I think interest rates are going to be slow. So make sure that you're buying in at a level that you can be able to afford the repayments. And hopefully it won't be the case, because I think the cycle is downwards, but that if there is an increase, that you're able to afford an increase.
Samuel, I've got to ask you in that context, which is a very volatile one, right? What's your comment on the view that while there, may be benefits or are benefits which make buying a house enticing, buying property in South Africa is not a particularly good investment for one. Buying and selling property is much more expensive than other asset classes. So why not opt for listed property stock?
So, Alishia, I think that's correct, but one's got to look at it in terms of context. So if you're looking to buy your home as a family home and put down family roots, I don't think there's anything better than making your first investment into property. I think that is a fundamental. We look for shelter. We look for a family home. We all look back fondly on the areas that we grew up in and the homes that mean a lot to us. Many people didn't get that opportunity to have a stable home and a stable family background. So for me, fundamentally, that would be the major reason that I would be saying, buy your family home, put down your roots, grow your family, and have a good upbringing, particularly for your children. The issue, though, is if you're saying, let's take it just as a direct line of straight investment, that's different, because then you're comparing a financial investment. And you're saying, can I do better in a financial investment? Look, your property stocks are far more liquid. You want to sell them to go and invest in Bitcoin or crypto, you can do so easily. It's easily available. You can trade it. Property itself, difficult to trade. A specific home, you've got to find your buyer. It takes time to transact, takes time to receive the money. So I don't think they're the same investment. I think the one is a financial investment, and I believe the other is far more investment in a lifestyle and a purpose. And me, I'm all for settling down your roots and raising and having a stable, good upbringing for your family.
That said, Samuel, are you seeing any, particularly exciting opportunities for property investors in 2025?
So what we have seen, particularly here in the Western Cape, has been a big number of people investing in micro and mini and small apartments, as they're called, particularly along the Atlantic seaboard and in the City Bowl and in the city, for a view to renting those out for Airbnb. Now, I don't want to discredit Robert Kiyosaki from Rich Dad, Poor Dad in terms of letting your money work for you. I think that principle is correct. But I do say that people must invest with caution. There are positions where Airbnb legislation governing Airbnb may be introduced. There's talk of it. I don't know exactly what form it will take, if it will come in at all. But a lot of those buyers are buying with a view for the rentals and the income to be able to finance their bond and their mortgage repayments. And I just say, look at that with caution. I think we have had very good returns till now, and I don't think you're going to get an oversaturation. Cape Town itself has done particularly well in terms of what people have seen as the best city in the world, etc. And the thing that I would say in a short answer to your question is buy in a place where the infrastructure is good, because that has shown where the capital growth is coming through. Part of the problem with South Africa, particularly in the Gauteng regions where we haven't had the capital appreciation that we should have had over a period of time, is that the infrastructure isn't good. So there's potholes, there's lack of electricity, there's lack of water, there's those elements which people are saying, well, if I invest there, will I get a tenant? Will I get a return? So my view at the moment, if you're looking to do an investment, make sure the infrastructure is good. Again, be careful of the interest rates, but I would say the Western Cape is leading the charge in terms of capital appreciation within South Africa. I don't think that's going to change. I would
If
be
you're
looking to
getting
try and
that kind
invest there.
of interest you are seeing right now from international investors as well, Samuel. So, what kind of trends are you noting when it comes to international investors wanting to buy property in South Africa?
So I think that the issue there is that, again, very much the foreign buyers are coming in, very much focused on the Western Cape for the reasons I've just said, the infrastructure, etc., the capital growth, the beauty. I mean, you can't argue against that, unfortunately, because I'd like to see foreign buyers buying all around South Africa. But they're buying in the specific areas. And what I have noticed, particularly in the Atlantic seaboard, the southern suburbs, and then the winelands, is that when they buy, there's always a criticism, oh, they're buying the best properties and they're crowding out the locals, etc. What I've seen is that the foreigners who are buying here have come in and said, right, how do we actually improve what we bought? They're investing more than the locals would. They're rehabilitating and fixing up farms. They're adding value and they're preserving the heritage. They have a far greater feel and a benefit for looking after the heritage than coming in and just knocking down and destroying, and often to an extent better than locals. So I think they've been a great plus. I think they've been spending more, investing more, creating more jobs, bringing their friends and families out, assisting in tourism. And that's all been a multiplier positive effect for our economy. So, some people have concerns about it. I'm the complete opposite. I welcome them. I think they're a great value add to the country as a whole.
Okay, got it. On your end, though, Samuel, the company itself has extended its footprint outwards, expanding its operations beyond South Africa into other SADC countries, but also into Mauritius and Dubai as well. I know that, we can't talk as if we're looking at one homogenous entity here, but how's South Africa's property or real estate market faring compared to some of its international counterparts?
Well, I think again, it depends. It goes back to that weather question. It depends where you are. So Mauritius has had a very, very good input. The SADC countries, all of a sudden, you're finding Namibia is a lot more attractive, and certainly in the Swakopmund area where our office is they've had a lot more developers coming in. There's a new mine opening up, a lot more interest. So it depends where one is. Zimbabwe has performed particularly well, which has been quite interesting because it's all in dollars, and there isn't that much land available for resales. And what we found is a huge expat Zimbabwean community that wants to come back and buy in Zimbabwe. And we've had to find ways to create developments and be able to look after that demand. Of course, the star rater is Dubai. Dubai has had unbelievable growth. It looks set to continue that growth. They're very, very focused on attracting people to buy in. And the interesting thing for me in Dubai when I was there last was that the head of the one development company that I attended a talk was quite at pains to say that we always perceive that the interest in Dubai is coming from the UK, from South Africa, etc. He says the greatest number of buyers in Dubai are in the Middle East and around the UAE, and they're buying there. And they says there's no shortage of those people, specifically Indians, etc., coming from India and buying. So their market looks to be still on a growth path for easily the next 5 to 10 years.
Samuel,
And
let's
the
leave it
nice part about it is that we get to be involved in all of it. And of course, our referrals and the opportunities to be able to pass across buyers and interested parties, is a complete bonus for us now.
Absolutely. Well, Samuel, let's leave it there. Thanks so much for having joined us in conversation today. Samuel Seeff is chairman of the Seeff Group.
Thank you, Alicia. Thank you very much indeed.